Hello everyone, welcome back. My name is Greg Furman, and these are the market positions for September the 27th, 2017. Now, our first trade for tonight is going to be in the Forex market. We're looking at the US Singapore dollar. Now, the US dollar index has extended through the level that I talked about in this week's Forex Weekly Outlook, giving somewhat of a green light to buy US dollars in the short term. So right now we've had a very tight wedge formation here. You can see our upper trend line has been broken. We have a fresh triple EMA cross from VantagePoint, and we're closing above the key 18-day predicted moving average at 135.42 with that critical level of 134.99. Now, our neural index is higher. Our predicted short, medium, and long-term differences firmly above the zero and pointing directly up. We have a crossover on the upside on the predicted MACD, however, still below the zero line, but our predicted RSI is suggesting we have momentum building to the upside at 63.8. Now, I'm not convinced the US dollar has a lot of strength going into the third and fourth quarter here, but we'll see how this one plays out. Now, right now, when we look at our individual crossovers from VantagePoint, our short term is up, medium term looks very good, but our long term crossover is the one that really has caught my attention here. And again, we usually only get 3 or 4 of these, basically 1 or 2 a month at best. So we've got one that's 2 days old. We're breaking out of this wedge formation. We still need to clear this resistance area at 136, which is a swing high, which the order flow guys are going to be watching very closely. So a break of 36, this is will accelerate to the upside. Now, once we've done our analysis here, guys, it's very important that we go into that all-important daily report to fine-tune tomorrow's entry point. So with that close, the closing price of 135.42, we're looking for a minor pullback to 135.09. We then target 135.86. Now, for you more aggressive traders, you can trail your stops up to this level and add to this position on a break of 136, but we do need to break through that 136, and we want all stops below 134.40. We want to make sure we're staying out of that broker radar. And again, you longer term traders, you can put your stops even lower. But again, I'm not convinced here just yet that we're going to see a breakout on the US dollar. It still looks to be corrective in nature, but for now, buying dollars, at least against the Singapore dollar, is a reasonable play. Now, our second trade for tonight is going to again be in the U.S. energy sector. We're going to look to repeat a trade that we had from last week, the Range Resources, the RRC stock. Now, what I had talked about previously was this major resistance coming in around this $19 per share. We've got what appears to be a confirmed bottom at $16 per share, and this triple EMA cross from VantagePoint that we saw last week. Now, we've had some retracements down along this very powerful 8-day predicted moving average, running along this $19 per share, but you can see that after basically about 4 attempts to break through the VantagePoint 8-day predicted moving average at 1901, it couldn't do it, and the stock is rising higher. So when I look at the indicators from VantagePoint, our neural index and predicted differences look good, but the position of the predicted MACD absolutely has my attention here. As we break above that zero line and the predicted RSI breaks above the 60 level at 72.9, it's suggesting that this stock has momentum building. So once again, when we understand price action and combine it with very powerful intermarket analysis, and we look at our individual crossovers, then we know that we actually potentially this is a time when we should be buying high. Now, the short term looks good, with those medium term crossovers looking good, our long term crossover looks great. So everything here, much like what I had talked about last week and the week before, that everything is setting up here for potentially a bigger move. Now, once again, if these indicators continue to advance, this predicted MACD, which I would really like to look at closer here, you can see that we've been below the zero line on the predicted MACD, which I'll highlight for everybody to see here. We've been below this level. We've had retracements to this level, but this is the first time we've actually been able to break above the zero line since essentially mid-April. So absolutely, when we look at a predicted MACD from this perspective, it's telling me that potentially this stock really could get moving here. Now, once again, just back in April, I will point out on that very, very powerful signal here from VantagePoint on the long-term crossover, and we follow the predicted MACD and the predicted RSI, we had a move from $30 a share all the way down to $16 per share. So that's a very interesting move, to say the least. So we really want to make sure that we're looking at the long-term perspective. It appears that we've got this bottom sitting here in place, so we want to keep buying this particular stock. So from here, guys, all we have to do is go into that all-important daily report and fine-tune tomorrow's entry point. So with that close of 1978, very minor pullback we're looking for to 1933. We then target 2025. Now, again, if we can continue to push through this resistance zone, which it looks like we can, we're holding above the VantagePoint 8-day predicted moving average, it potentially could lead to a much bigger move towards $24, $25 per share in the weeks ahead. So not only a good looking short-term trade, but potentially a very good medium to longer term trade. We want to make sure we're also keeping all stops below $18 per share at a very minimum. We want to make sure we're giving this trade a chance to develop.